Good morning, everybody. Happy Wednesday. Welcome back to the Daily Profit Plan. Let's get started. Yesterday, for the most part, things were kind of a nothing burger day, a little bit of volatility, a little bit of VIX going up to 20 something, 25, come back to 23. Price action for the day was very little movement. Maybe finished slightly on the softer side because we had a gap lower. But we did our job in the morning. Had a nice little win for daily profit play. Screen's coming at you. Chat's open. Let's go. All right. All right. So today, what's moving and shaking? What's cooking today? We have NVIDIA earnings after hours today. We have FOMC minutes today at 2 p.m. We have non-farm numbers and some of the, I guess, delayed labor market news tomorrow morning. And I think we have more Fed speakers today. So NVIDIA up pre-market, mags up pre-market, futures up pre-market. Was about 0.2, 0.23 this morning. Now it's down to 0.15, but still positive for futures. NASDAQ futures up 0.25%. Dow futures green as well, slightly. Let's get our gamma levels for the day. Okay, let's go. Let's get our real time up. Yeah, here was the day yesterday. So our daily profit play levels we needed cooperated nicely. This was the opening bell price, closed about 20 points lower. So like I said, I mean, we had a gap lower. Things stayed red on the day, but plus or minus, we were reading 55 pre-market, 49 to 50 at opening bell, and had a 21-point close. So market makers did the job. Our trade was great for daily profit play. We ended up grabbing a nice chunk. I closed out the $1.05 for 55 cents. When I started my masterclass yesterday around 12 o'clock, it was trading down to 40 cents. A lot of traders were sending me messages, 40 cents, 35 cents, 25 cents. So held on to it a little bit longer and got a nice fat winner for a daily profit play, which was excellent. So, all right, let me post this inside of the tracker. We closed at 66.17. Okay, so yesterday 66.17. And we technically were just below the 50% ATR. Now that's centered based on the previous day's close, so just below the 50% ATR. All right. Let's get that picture here. Copy link. So nice win the day. Gap lower, plus minus 55 pre-market, plus minus 50 around the open. Day closed minus 21 points from the open. Okay, they did the job. That's what we needed. Easy peasy. Okay, very nice. Now we're centering at 66.17. Maybe a little bit of gapping here, not much, 0.9. We might just open up flat, which for a second might make things a little bit easier to read this morning. VIX still elevated. We're at 24 VIX with NVIDIA earnings coming up today, with labor market news and non-farm payroll numbers coming out tomorrow. Whether or not they're believed and trusted, we'll see. Data showing like a 58K print for non-farm payroll. I have no idea if it's going to be good or bad. I really don't. I think we shouldn't expect like 100,000 jobs. I think we'd be lucky to have a positive print, to be honest. And of course, the whole number that prints could be completely questioned. Is it relevant? Is it actually last month's data? Is it 40 plus days ago? I don't really know what the news is tomorrow. So, all right. Levels on the day. Pull that up in a moment. Recenter this thing at 66.17. Okay. 2413 VIX. So potentially a 1.51% move today. It's just crazy, like intraday getting those type of swings. It is Wednesday, and that's a good thing. I mean, usually Mondays, Wednesdays are pretty range bound. Also, with the Nvidia earnings tomorrow, I'm just curious, like, is the market going to have a big mover today when we have such a massive earnings catalyst after market? Um, my gut would say it's going to be relatively calm today, or market makers will continue to kind of let things stay within their ranges. Hopefully, we go to SPX for the day, plus or minus. Good Lord, 64.5 on the day. So 64.59 divided by 6617. So, I mean, even the market makers are looking for like almost a 1% move on the day. So hopefully our, plan for deltas work out pretty nicely. Masterclass yesterday was really solid, by the way. I did push the notes. I put a new notepad in here. So anybody that's in the Daily Profit Play class, recording should be up today. All the notes we took through the session yesterday. We did our core strategy plus understanding our defense trades. We have never taught it that way before, and I think a year plus into this, I've been doing this stuff for 3 years with zero DT. This is probably the most confident that I've been with just a plan for this course, especially trading zero DT. So hopefully everyone that was into class yesterday enjoyed it. If you want to, get into the Daily Profit Play, you want to go through that master class, we'll do an encore on Thursday. I think Thursday I've got to schedule a little bit differently. Thursday is scheduled for a 1:30 p.m. masterclass. Thinkorswim showing 48.8. Well, I mean, this will change at the open. I'm going to brace for this. I mean, again, this is fine. When we go to the open, if the VIX is at 24, I mean, we're at 23.95. So I'll do a 23.95. So we're looking for like a 1.5% move. Okay, I'm referencing that October 10th candle low. Go from the open. We might have a little bit of a gap here. Futures at 0.08, so a tiny gap, but not much. Let's go 1.5%, kind of get our highs and lows. So here's the close from yesterday. 1.5 puts us right around the 65. I mean, 65.18. So we're looking for 65.18. Potential low. Now that could be obviously for our strikes, that could be a 65.20, 65.15. Potential low. That's VIX at 24. What I do the math by? It was 23.95. $23.95. So down here. And 1.5 to the upside. About 67.17. That could be your 67.15 or 67.20 strike. 67.17. Potential high. VIX at 23.95. So I get it that the VIX is dropping a little bit. I can maybe consider some modifications if I want to. But that's just looking at kind of the highs and lows for the day. I'll keep an eye on those. Okay. Joined yesterday. We'll go over the weekend. Great. The notes, yeah, let me see if they were posted. I think we were just going to put them into a PDF format and then throw them in the classroom and see if we got those in there yesterday. Let's go one-click trading. Okay, so here is one-click trading. Jump into Daily Profit Play. Check our masterclass recordings. See if we got a timestamp from yesterday. Not in there yet. All right, so we'll get the thumbnail will be me. I think I was just wearing a black pullover yesterday. And we'll get the text file PDF up as well. It should be all in here. Let me see if it got posted somewhere else. Nope. All right, so it's going to be in here. It'll be in under recordings, see all items, and it'll be a thumbnail timestamp for November 18th. And then we'll have a little text or PDF file in there as well for notes. I'll double check on that today. Okay. And then, like I said, encore presentation. New students, feel free to come into a live session on Thursday with me, or you can review the session from yesterday, get a head start. But like I said, one of the best classes, just because it's the most confident that I've ever been trading zero DT, and I've been doing this stuff for 3 years and actually making money doing it for 3 years. So that's saying something. I like our plan every day. We've worked really hard to kind of refine this stuff, and it's not we don't win trades by accident. Like, this is all part of a pretty straightforward systematic plan every morning. Okay. All right. What do we have? 15 minutes for the open. Let's do. So we're trading mags below the 50-day. SPX, we're below the 50-day. I think what's going to be really important, and I'll just say this for the week. I mean, we might have a big nothing burger day today because of NVIDIA earnings, and that's after hours. If the market just kind of hangs out between this October 10th low, the candle price action yesterday, we don't really have much movement either direction. We might spend a little bit of time, let's say, between this 50 and 100 period moving average. It is going to be absolutely critical to see the bulls reclaim the 50-day moving average. If they can get back above it, then I think we resume the upside. If they are trading inside of this, it is literally a coin flip of whether or not we see more pressure one way or the other. I do have an interesting hypothesis for the next, let's say, 30 to 60 days. Sentiment is so bad. U of M sentiment is so bad. The AAII sentiment is so bad. Like last week's print, which we'll print another one this week. So today we'll have another AAII sentiment print. But the bears have printed such a high level that usually bears aren't rewarded like this. If everyone is super bearish and the sentiment is so bad, that means that everyone's braced and hedged for any type of downward move. Like right now, it's like people may be hedged for this little slow decline. It wouldn't surprise me if perfect world, the market just kind of stays here and chills and decides, oh, we're going to go higher now. And the market gets saved by NVIDIA and off we go, hitting all-time highs by the end of the year. Cool. I think this market could hit both ways. I think this market could strike both ways. This market could go, up first to kind of fill the holiday joy of everything is hunky dory and everything's great at the end of the year, only to turn a little bit south into very, very late 2025 to finish the year, or to go into 2026 with a bit of a fake out, right? That could be just a poke. That could be a little prairie dog move. That could be something where it just doesn't stay, or because we're already rolled over a little bit and there's concerns. We have this October 10th candle as we poke below here, possibly even hit these dynamic moving averages, and then push back up and stabilize. Now, same thing is like, is this a lower high that rolls over again? Are we going to go back up to highs again and the market wins both ways? And we have some type of pattern like that where it's a broadening pattern, and we have to figure this stuff out. So part of me now is like, rather than like, oh, I need this level to hold, it's like part of me thinks the market's going to take it both ways. Like, which will be frustrating to have that much volatility. But I mean, we're trading at a 20 plus VIX, and we have been trading at a 20 plus VIX for weeks now, right? I mean, you go back here, it's like we had in early November a 20 plus VIX, retreated, 20 plus VIX, retreated. Now it's higher, 20 plus VIX for multiple days in a row. Like, this thing isn't retreating, this isn't reverting, and it's just one ugly, push away from like, now we have a 30 VIX. So it wouldn't surprise me to have something silly like that happen where the market's like, yep, we're going to, kind of reward the bears very quickly. And maybe, okay, what forces everyone to do is load up on hedges right? Everyone's going to jump in and pay, like expensive hedges because they're like, here it is, it's coming, it's finally coming. And then the market fakes out, finds support, goes back up, whether it's like a lower high or retest the highs. I mean, I don't know. I just thought a lot about that yesterday. It's like this market could do both things rather than it's like it's got to hold here. It doesn't. It could fake. It could be like an aggressive low V bottom that rips into the end of the year. And I don't know why. It's like none of this has a catalyst. It's like we just have elevated volatility. We have the market feeling like it's a bit on the brink, and sentiment is crazy bad. But usually, when I see sentiment crazy bad, it's not a sign of bears. Usually, they're dead wrong, right? So this crowd, you can maybe give them a glimmer of hope, but I think you're going to fake them out. And then the same thing to the upside. It's like we got crazy bullish. I think they get faked out to the upside too, because this market seems a little long in the tooth until we have some better broadening. Like market breadth has been terrible since literally like August, September, which is why I've been cautious. So anyway, just my two thoughts. Um, dollar index is something to watch. Bonds are something to watch. It's been I think bonds have had like one of the best years since 2020, which I don't know if that's saying much, but it's better than nothing since they've been in like a hot little bear streak for the last 3-4 years. But off of these lows, let's go year to date for bonds. Year to date, I mean, bonds are up 1.44%. Granted, they have a yield to go with it. So, I mean, um, your net return would be somewhere in the 3-4% zone, which for bonds and safe haven certainly feels better. But equities are still clinging to double-digit gains for now. 12.1% on the year for SPX. QQQ or NASDAQ is up year to date 15.95%. So anyway, TLT, we'll see. I mean, it's been behaving a bit more like a safe haven, and it's that traditional 60/40 portfolios had a little bit more reliability, where we've got some equities are hanging in there, like I said, 12 to 15% between S&P and NASDAQ, but bonds off the lows are pretty steady. Once we had the kind of blow up basis trade back in April, things have been very steady in bonds. In fact, let's see, Black Friday results would impact markets. What do you think? I mean, they will, but what do we get those? What do we get for numbers? We have to get like December retail sales from November. I mean, Black Friday stuff is already starting. So people are out starting to spend for the holidays now. I mean, maybe it reflects in December retail sales. But you have to remember, retail sales have been carried by the top 20% of purchasers for the last 12 months. So we still have like the higher demographics, the top 20%, if you will, of earners are doing most of the spending still. Home Depot had a big revision, and forward guidance is pretty sad, saying that all their financing projects are not happening. Like most people, if they're doing DIY stuff, it's gardening, it's painting, it's landscaping, it's like stuff that you're just paying for in cash and doing stuff around the house. Big projects are getting put on hold or waiting because nobody's looking to finance stuff like that. So I get it. Like they're big projects. Let's see here. If we get military involved in Venezuela and Mexico, it looks like a real possibility. Oh, okay. I mean, does war ever mean bad things for the markets? Not really. I mean, if anything, like somehow war and conflict galvanizes the markets into, is it a commodity based move? I mean, I don't know. And honestly, this market shrugs off so many things, like it might even flinch with the conflict. I think if US, if we have a conflict with China, I think the markets care. Conflict, Venezuela, Mexico. I mean, okay. I don't know, maybe. But look, it's like I'm not going to grasp at stuff. It's like I think this market with sentiment as bad as it is, and it's like we have a very like polarizing outlook on the markets, right? It's either going to be the fourth turning and this thing is going to be like bubblicious and this thing's going to melt down, or AI is truly changing. This is the greatest technological innovation, blah 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 ever. I don't know. and somewhere there's the truth. And I don't know what that looks like. So what we can control is what we plan every single day, which is what daily profit play is all about. I think that this time of year, it would be really frustrating to see like a December massacre where we have, 12% upside and 15% upside and it gives it all back. That'd be a terrible way to finish the year. So if it gives some of it back, and by the way, we've had volatility in December. I mean, even last year, middle of December, this market was down 6 to 7%. Okay. That pullback was a 5.5% pullback and then ripped up to the highs before. So this would have been, we were down into December 20th or so, and then ripped up to retest into Christmas and then stalling into the end of the year. But we were still like 4 or 5% from the all-time highs. And then we came up into fresh highs into January and then rolled over into February. And that's just last year. We've had some terrible Decembers. 2018 was terrible. 2019 was pretty rough. We've had some rough Decembers, but anyway, it just seems like the whole seasonality push that we should have had like a little pause maybe in August, September. We didn't. It was all-time highs in August, all-time highs in September. Even October was a big bullish month. So all the seasonality has kind of been pushed. So November, December, we'll see. Probably some sideways, but maybe a pullback of 5%, maybe 10%. And here we are. So we got to watch and let it unfold. I just think it's crazy that's like it's either extreme left or extreme right tails. And how do you position for that? Well, I've got crash insurance way out to kind of cover my butt on the left tails if I need it. And those are, below 6,000, below 5,800, below 5,500, below 4,800 or 5,000. They're way out there, but their expirations out to April of next year, June of next year. VIX is high enough that I'm not really going out to December next year, although I would if things settle down a little bit. One thing I'm surprised is that we're this high and elevated, and the VIX just doesn't really seem to be going down. Now, that could all change. Like, literally, if we start to see the VIX back below 20, then we might just be reverting right back down into the teens again, right? We get below 20, which is quite a bit lower. We get below 20, all of a sudden we get back down to like 17, 16. We're probably talking all-time highs again. But a fresh move to 26, 30 is not that far away. And we zoom out on the VIX. We've had plenty of pushes. We have some questionable times. 2021, 2022, when things were topping out, we saw a pretty consistent, 25 to 40 VIX, but that was a bear market, right? Other than that, low volatility and flushes up into the 30s. We've got plenty of flushes into the 30s. If you look at this context, like it's barely elevated. The only thing I noticed differently is that we have lows down here, and now we're going like slightly higher lows for right now. That's like the only thing I'm kind of noticing. So we've had a spike. We had some higher lows here, and that led to a little volatility event. So I don't know. Could we have another volatility spike? Maybe. But we will see if it actually sticks. So I think we could see this, kind of chopping people up both ways. The investor survey prints today again. I'm curious where the bulls and bears stack up. We had a big drop in bulls, big jump in bears. Prints again today. Let's see where it's at. The NAAIM. So this isn't a surprise. I've said this for a while. Like, once this thing hits 100, typically we see some pullbacks go with it. So if you draw a straight line down from when this thing poked 100, so right there to right there, it was a pretty good timing mechanism for the top, and that was right after that little low volume and terrible market breadth rally to get to all-time highs post October 10th, right? But we're still within just a few percent of our all-time highs. And the Fed stuff is big news, but right now it's pretty much 50-50. 50.9 for a cut, 49.1 for a pause. This is going to have to continue. This is either going to be the most indecisive Fed decision that I've seen in a long time, or one of these bars is going to climb until we get into December 10th. If the bears are starting to pull the markets over a little bit, then this probably goes up in favoring more of a cut, and maybe the market wants that. I don't know. So again, I'm not going to sit here and grab it headlines and grab it stuff. It's like watch price, but just throwing it out there as potential that we could go both ways. We got to be ready for that. Okay. All right. Okay, let's see where we're at. So 65 was my plus or minus, but that's before the market. So let's go opening bell. And here we are. So we're open, looking for price to start moving here, 66.17. Now we're at a plus or minus 63. Okay, let me know what you have in your, if you're looking at Tasty Trade, let me know what you see in Tasty for their plus minus on the day. So positive net gain of a pivot around 66.50. Previous lows 65.80. Remember the October 10th low is around 65.50. Okay, I'm going to have a look here. We didn't really have much of a gap. So we closed here, opened slightly higher, but like I said, slightly higher. Let's have a look here for our deltas. 66.90. That's an 11 delta. See if I can get, yep, I'm going to try to get a $1.05 for that 10 delta. Looks like I get filled for $1, which I'm happy with that trade. All right, I'm in. So that was quick. I'm in right away for daily profit play. Got filled for $1. I'm taking it. That was a call side, 13 delta and 10 delta put side. I kind of set up thinking it was 11.11 and it just price went up slightly. So anyway, I'm going to get in and trade is executed. So new trade for daily profit play members coming in Telegram. Today's the 19th. Okay, trades in. Okay, and now we're seeing a plus or minus 46, 47 on the morning. Okay, so 67.17, 65.18. I need to see if price will stay. I think 50 or 45. 45 is my bottom, and 90 is my top. So 66.90. And 45. Okay. Adobe just got filled for profit. That was a pinch point or newsbreakers. Let me see. Pinch point just got filled for a profit. 480 close out for 535. Nice. Take the winner. Okay. So pinch point having a winner. Adobe 480 close out 535. So that would be 55. Okay, small winner there. So 5.35. Okay, profit on Adobe. Update that in Telegram for pinch point. That's trade number 53. Okay. So we just got into the put side of that trade and we got paid. So and if you, I mean, that trade is going out to December 19th. I have some other trades on Adobe. I think they're way out of the money. I've got some ratio spreads running on let's see here. So pinch point got paid 250 by 240 ratio spreads for Project Options Edge. That's up 75% of max profit, still a 96% chance of profit. So I'll hang out of that a little bit. That's out to January 16th. Gonna get these grouped real quick. Okay. Any others? Purple. There we go. All right. So ratio spreads that are up about 75%. I'm gonna go after that extra part of that $50 that I can have by letting it go a little bit further in time. Okay. So here's price action on the day. 66.90 is our call side. So that is above the positive negative gamma pivot. That's about a 50% ATR. I'm not saying it's unreachable, but bulls would have to do a little bit more work to get that done. So hopefully our trade looks pretty good for the daily profit play. It'd be important to see what happens right around that 66.50 handle today. If we come to 66.50 and hit and stall, or come up to these highs from yesterday, hit and stall, that's around 66.60. So we'll keep a close eye on that. VIX is retreating a little bit. We're at 23.65. So potential high. I might do a broken wing up here as well. All right. So I'm going to put in a broken wing for a top and bottom. Keep an eye on that stuff for the day. 95 by 35, 10 wide, buck 60. Good, Larry. Looking good, man. I like that trade. So let's go from the open. So we have a gap up 1.4 to 5. I mean, the VIX is at 23.73. I'm going to pull the VIX from the 24. It was 23.8 or 23.9. I'm just going to say 24 VIX, which I know is kind of up there, but 24 by 16 is a 1.5% move. So I'll take that from my small gap up. Gap up here and a 1.5. So about a 67.24. So 67. 67, 20, 25, 35. It's going to be a kind of a bonus trade / defense trade if I need it. I don't think we're going to go that high, but if we do, that's a pretty good way to call the top, get $1 credit, risk 4, make 1 plus a profit trap. That's going to pend. And then bottom, start from the low, go 1.5 and about 65.18. So I'll do that one at a 15 pin. 65.15 pin. 65.15. So buy, sell, buy. Okay, a couple penny orders. Let's go. Yeah, we talked about in the master class yesterday, Sean. I'm just putting in those kind of top and bottom pick trades based on the VIX. I don't think we're going to need them, and they're pending, so they may not get filled, which doesn't cost me anything. So rather than like spending money on a defense trade, these are going to sit and pend. We dissected that over like a 2-hour masterclass yesterday. And also, because the VIX is higher, I mean, if the market's going to move, towards our VIX extremes, like even though I have a low delta daily profit play, it's still very possible that directionally this might test the high or the low. I don't know. So I want to keep a close eye on this, right? If I can get that top trade hit around like 50 cents or a dollar, that helps me mitigate some of the risk. I hope the market makers will keep price within the plus minus on the day. So we saw plus minus like 50. Okay, we open here, and this would be, I mean, price would have to go and be above 64 points. And the market maker move is like plus minus 50, plus minus 49. So hopefully they do their job. And we're not sitting here taking on any heat to the upside. Okay, so I'll throw these trades in. All right, this is going to be in daily profit play Telegram. All right, that is a 15 by 20. They do 15 or do 25? I think they do 25. Yep, 20 and 25. So 20, 67, 25. And then the 2015 and 05. 65, 20, 65, 15, 65, 05. Okay, trades are in. Pending orders. Is it too late in your opinion to enter? No. No, just go delta neutral. I mean, you're getting some direction right out of the gate. I mean, look with the VIX at 20. I mean, it's kind of never too late to place a trade, honestly. I think open to close, it's the market makers are on a mission to kind of keep it kind of contained. But if you're, you know, kind of delta neutral, it's like just keep an eye on your plus minuses. Basically, it's like a 45 to 50 from the open. So, if price is going up here from the open, so from yesterday's close to the open, you're plus or minus 50 points. Like I would want my put side to be lower than 65.75. And I would want my call side, I think that was about a 50-point move, right? Yeah. So below about 65.75 would be my put side. I want it lower than that. And then my call side, I'd want it to be above like 66.80, I think, to be safe. So I'm going a little bit further than that. It's my center at the open was getting filled for a quick dollar. So I'm 60, almost 70 points higher. And hope the market makers do the job. Do I wait to, I mean, mine are in, mine are pending. Like I said yesterday, you were in class yesterday. The defense trade is, you can call it defense. You can also call it, I'm pretty confident that markets won't go too much higher or lower than that. So I don't mind just placing a trade, but the reason I want it pending is because if we see a lot of direction early in the morning, there's a bigger likelihood that that trade gets filled. If it gets filled for, 50 cents or gets filled for a dollar, I really like that trade. So, is there risk? Yep. I take the extra risk if price surprises us to the upside. But I was using a 24 VIX and we're trading at 23.48. So we shouldn't really see price going higher than the VIX value. You take the VIX value, divide by 16, that gives you a roughly percentage move. So we shouldn't see prices going, to a 24 based VIX when we've seen the VIX retreating for the morning by about 50 points. So we'll see. Today's FOMC market, I mean, yeah, possibly. My goal for daily profit play though is that I'm not holding this trade until 2 p.m. I'm hoping that's not what has to happen. It's FOMC minutes. It's just a release. It's not Powell. It's not a press conference. Um, but yeah, I get it. Like FOMC minutes this afternoon. I'm hoping this doesn't get treated like an FOMC day, and we can actually see our, prices pretty calm, pretty centered. And as we roll into like 11:30 or noon today, we can take our profit and not have to worry about the 2 o'clock news. Okay. All right. So daily profit play. I need price to stay below this line, above this line, and then I have a butterfly up here, which is broken wing. I have a butterfly down here, which is broken wing. These are pending. So all I have to do for the day is just hang out. If price is going to stay in here for the morning, then hopefully daily profit play is going to show us, dollar fill get closed out for like 70 cents, 65 cents, 60 cents. I mean, with an FOMC at 2 o'clock, I'm okay. If we take, 30, 35, 40 cents profit, I'll consider that a nice win and not have to worry about the drama in the afternoon. All right, good stuff. I would like to bring up the pinch point scanner. Let me get a couple comments here. Campaign reports. Uh, Sorry, 1 second. I'm working on this income grid thing. I was just answering a couple questions for developers real quickly. I should be able to get hopefully some guts of this thing in the next couple of weeks to show what the heck I've been working on here in the background. Um, okay. I was going to bring up the masterclass from yesterday. Blake, I'm going to hit you up with a quick message as well. See if we have.
What's up, Chris?
I'm gonna hit you up with a quick message in Slack real quick,
Okay.
and I'm gonna ask for the masterclass to see if I'm gonna get those posted today for daily profit play. All right, sorry, I've got developers are hitting me up with like, hey, all these tech questions. I'll just put a pin in that for a second. Okay, I want to jump into pinch point. That's what I was getting at here with one click trading. I got to get out of my master class. Let's go to pinch point. Let's take a look and see what looks good for today. Watch list Wednesday. Going to the pinch point scanner. Here we go. We have 15 stocks ready to go. Let's have a look and see if we got some highlights. Anybody have some tickers you want me to take a look at? We'll go pinch point here. Let's see if we have anything in like, ideally, I'm looking for like get sets and goes. If we've got some household names here, Netflix is in a get set. That's pretty good. AT&T, it's pretty low volatility. Uber, not bad. Wells Fargo, Qualcomm, Schwab, Gilead. These are get sets. See what we have. Any household names in our go. CVX, is that Chevron? Hey, interesting. I mean, a little bit of chop here. This isn't a super volatile stock. We've already moved $6. All right, I'll take a look at this one. Chevron, BKR. That's is that Baker Hughes? Got a lot of energy stocks ready to make a move. Okay, interesting. I mean, this literally is all energy. Um, all energy. Sempra. What a crazy wild move that was. 60 to 91. So CVX, BKR, HAL, those are all energy stocks. So HAL, Halliburton, I want to make sure it's this one, right? Halliburton, let's double check. Price wise should be around $26. Looks like we just came out of a pinch on this one, but it's coiled a little bit here. Keep an eye on that one. Let's look at XLE. I just want to look at the energy sector. Okay. I mean, also pretty coiled. I've got some naked puts and some ratio spreads in XLE, XOM, XOP. Um, I don't mind kind of playing energy as a non-correlated for 2026. If we're gonna have a rotation, I'm trying to play AI a pretty boring way. Yeah, my philosophy on AI right now is not to chase the high flying tech stocks that could be crash and burn. They pump to the moon and then they freaking crash. 78% in some type of major deleveraging. So my idea is stay out of the way, stay pretty passive, but participate in the energy build out. If there's going to be crazy demands, there's going to be energy companies that do pretty well. I also think that we can have a pretty interesting rotation in 2026 into healthcare. I think Pfizer's not a terrible play. If we start to see Pfizer participate in any way, shape, or form with the word AI, with attributed to their R&D, so research and development, They're using AI for better vaccines. They're using AI for different drugs are coming to market. Their trials, whatever it is, that could be a huge potential move for them. Maybe it's all like potential, but I'm chasing things that are already like pretty low valuations versus crazy high valuations. They make money, they have a dividend, it's reliable. They're kind of sitting on a ton of cash. Fundamentally, discounted cash flow. They're $55 to $60 company based on their multiples. So Pfizer is one of my positions. I do own some shares of Pfizer. I'd love to see this thing get back into 30s. I just don't know what the catalyst is going to be. So I've got some Pfizer exposure. I have some XLV exposure, which is healthcare. That's done pretty well. That was a ratio spread that did pretty well. Was willing to take the assignment, didn't need it. Also did some Johnson & Johnson, J&J. That did really well. Had some shares, did some puts, did some ratio spreads. Ripped this thing from like 140. I did like 140, 135, 130 puts, and took most of the profit as this thing is just screamed up to 200 plus. And I'm not going to chase this thing at the highs. Merck, I started to establish a position on Merck. We're trading at 96. We've got some overbought conditions, so I'm working with it here where I'm going to, take a small stake in Merck now, area 1, and then we'll also add another position at area 2. So if we are going to, use this support to rally from, I get it that this could be volatile enough where maybe we put in a low, we retest that low, this is our trough, and then we kind of range bound here. But if we break and go higher, I think Merck has a lot of potential to be a $100+ stock again. 120, 125, 130. Okay. Let's see here. I own like 400 shares of Pfizer assigned at 40, just waiting. Yeah, not a bad play, Mike. It is frustrating. Selling calls, it's like it's not really worth it, to be honest, unless you're selling calls at a price where you're like, I'm willing to let it go. I'm willing to let it go at this price, then sell calls. Because otherwise, week to week, those premiums are terrible. You can look out. It's not awful, but it's certainly a low premium stock. If I went out a year, just let's say I own a position, I go out a year. So let's treat this like I bought shares right now at 25.30. If I bought shares at 25.30, I went out to December of 2026 and I sell an at the money. Broker for it at the money would give me $2.69. So 269 divided by the 25.31 price. I get a 10.6% premium on just selling that call. Now the dividend itself is 7%. So I can, if I sell the call and price goes above it, I'm not going to get the dividend. If I hold price, I get the dividend and price goes up. That's probably a better result. But obviously, we want to see a price can go up. Now it's come off the lows of around $21 and it's up to 25 and change. We ripped up here at about 27. I still don't think this is necessarily done. But if we, either stabilize in here and we kind of build out this low to high, this kind of builds a neckline and then we break above, well, this is kind of open space trading where I think we could have a pretty impressive run into like the mid 30s again. Look at this, just big pullback zone, right? This big pullback zone for this recent sell-off. Nice directional freaking move, by the way. Market's already got 45 points for the day. Interesting. The 100% ATR is 67. That is where my broken wing butterfly is. If we get stupid to the upside, I get filled on a broken wing. And I wouldn't be mad at that. I'm just hoping that my calculations are, accurate, which we're still using a 24 VIX and this thing is 22.5. We've reverted on the VIX today. Here's my, let me go back to this on a 10-minute. So the VIX is falling pretty hard and markets are, going up as that typical correlation is. VIX up, VIX down, VIX is falling, and S&P is up. Plus minus about 50 points in the morning, 46 points. It's already moved the entire amount. We might have to go up a little bit and then kind of fade off. If we hit the 100% ATR today, we're back in a positive gamma for the first time in a while. That's not nothing. So positive gamma means that this market just might be selling calls, selling puts, and trying to keep things positively afloat. If we have a big ripper to the upside, again, day isn't done. We have FOMC minutes. I don't think there's going to be like a double catalyst and stuff like that. I don't think we're going to be majorly surprised for the day. If I get filled on the broken wing, I'm going to stick with it, and I might actually put a defense trade above that broken wing to see if I need it. Otherwise, we go up here for the morning, stall, maybe come back to center. If we hug this positive and negative gamma pivot point, which is around 6650. So we're up for the morning. If we stall here, come back to center, then our trades are okay. All right. So back to Pfizer really quickly. If it gets into open space into the 30s, it's like I just took this big fib, and I can go all the way from like this recent high, but I think this is still like a structure trade. So high, low, lower, high, lower, low, and it just never stopped. Like this, when this fell, we fell from 55 down to 25. So I'm looking at this as here's a high and here's a low. I could technically go a little bit lower, but just look at some really simple fib numbers, like pull back to 38%, $37. Go to this low here, pull back to $34. You pull back 50% of this move, and bigger picture, I'd hope that Pfizer is, going to be able to revisit $55 to $60 at some point in the near future. Maybe within the next 3 to 5 years, where Pfizer's, I don't know, like fix healthcare, man. Our freaking healthcare system is a joke. Our prices are outrageous. Every year, it's like stuff gets more expensive. It's like I can't tell you how much I fear like having to go to the hospital. I mean, I broke my arm 2 years ago now. It feels like maybe 2 years ago now. And just like going to get like an MRI and get some physical therapy, I'm like, it's like $8,000. It's ridiculous. So, and we had a baby, and that was 120 grand. With insurance, it was still about 15 or 20. But I don't know. Anyway, and I'm talking like we're pseudo youngish. I mean, I'm not young, but pseudo young. But I mean, I wouldn't want to have to go to the hospital on a regular basis. I have an aunt who has cancer right now. It's like they're going to the hospital every few days. Who knows what type of coverage they have, but can't imagine it's great. Or I can't imagine it's not expensive. Anyway, I don't envy anybody that's got lots of time in the hospitals or for treatments, because I think we have, I don't know, I'd say one of the worst privatized healthcare systems in the world, where it just seems like it's a ripoff all the time. But that's just my opinion. Anyway,
You're not
Pfizer.
wrong.
I'm not wrong. Okay. I mean, Blake, you're about to have a baby, right? Alex
Yeah,
is about to have a baby. It's like, I mean, dude, we had our son was in the NICU for a week, and
that's
I mean, in the back of my mind, I'm like, we have to do this. I mean, he needed it. It was he had like some fluid in his lungs when he was born, so just to like flush him out, and then like I think a lot of babies have this when they're born, but he had jaundice, so like they kept him under the blue light stuff for a couple more days, and he was
mhm.
like, I think when he was born to when we took him home, it was like literally a week, and I was like, I wonder how much money this was, and it was like over six figures for that week,
Yeah,
you know.
yeah.
So
That's we figured it out. We got like a $5,000 deductible, so that's
yeah,
gonna have to get paid
yep,
regardless.
yeah, it will. And I mean, you're having a kid, believe me, you'll cross that no problem. So
Yeah,
going, I mean, your baby's due like when? February, March,
yeah. February next year.
February. Okay, so you'll
Yeah,
you'll meet that deductible, and then the rest of the year, your stuff will be hopefully taken care of by insurance. But
hopefully.
anyway, it is what it is. It's just like between all the you know uh company work and employer paid healthcare and stuff, it's like it just gets pricier. Like coverage gets worse and prices get more expensive every single year. And what's funny is, have you seen the government data that shows that somehow the government data is showing that our healthcare costs have gone down by 18%? I'm like, in what
What?
world? What world is that data coming from? Like, where do they pull that out of their butt?
Yeah,
So
that's some
there's
of
a
that
guy, yeah.
manipulated data they were
Oh,
talking about.
absolutely, absolutely. Let me see here. It's probably in Twitter.
Oh, for
It's
sure.
been a minute since this guy posted it, but it's like laughable. It's like there is no way that this is real. But Charlie Bolello here. It's probably been a minute since he's had it. I don't know if I can search his posts, but um, let's see here. FMS investors see AI bubble as the biggest tail risk. Okay.
Uh,
So AI bubble, tail risk, disorderly rise in bond yields, inflation, consumer credit crunch, trade war, dollar debasement. So literally AI bubble is like the biggest risk for most people right now.
number
Surveying the
one.
markets. Gold, one of the best performing assets. Bitcoin turned negative. That was a big story this year.
Mm-hmm.
Delinquencies rising. Like this guy just brings a lot of data, that's why I like him. Anyway, it's been a minute since he's probably posted on the healthier stuff, but it was something reported by the government that our healthcare costs have gone down by 18%. And then he looked at like insurance premiums that have gone up like 56% in the last 3 years. So
Yeah.
he's like, there's no way that that data is accurate. And I don't know where they're pulling that from.
No
So
way.
crazy, right?
That is crazy.
So, anywho, all right. Let's see. It's just after 10 o'clock. Let's get some other. What other news we have coming out? So we have FOMC minutes today. Nvidia after close. Let's go back to Wednesday. Some Fed speakers. So Moran already talked. Any highlights there? Trump speaks at 12:15. I don't know why or how. U.S. Saudi Investment Forum. Okay. FOMC minutes at 2 p.m. Market has gone straight up for the morning.
Mm-hmm.
Okay. So look, my call side is 66.90. We're already there. What do I do to defend it? Nothing. Right now, I just chill. Right? Like the day isn't done. If market makers are going to do their job, then they need to keep prices within that, 45 to 50 points at the open. The day isn't done. FOMC minutes might push this back down, especially if the FOMC minutes reveal that the Fed is still indecisive about December. Maybe the market doesn't want to hear that. So we're not done yet. I do have a defense trade. Let me see what that brokering is offering right now. It may not be $1, but maybe it's 50 cents. I don't mind getting the trade in around that price point. Call sides are on 25 cents for broken wing. Let me see if I look at the start of that broken wing. I could get maybe some premium on a credit spread right now. So 20. Like this is, I mean, there's more risk in this trade. Like I could get 70 cents on a call spread. I'm risking 430 to make 70. Now that's not that exciting. But if I did I don't know. I'm just gonna like hear me out for a second. I think we calculated the top based on the gap plus the VIX. The VIX was around 24. The VIX is retreating hard. The market's pretty directional for the day. Now, there is risk in the trade. I think the smart thing for me to do is just sit on this thing a little bit, see if this fills for if it fills for $1, that's a great trade. If it fills for, if I monitor this and maybe take it for 50 cents and accept the max risk of 450, that's okay. Part of me also wonders if I just get in like a 30 by 40 and try to grab like an extra $2 to $3 of income on this. It's like I'm kind of setting the top. Now there is risk in this trade, and I want to emphasize that. Like there's no free lunch. If I'm going to try to call the top, like if I get blown through the top, I'm losing, right? But if I'm going to lose on my daily profit play and risk $4, I'm trying to find a way to defend that trade. And so that's why I don't mind setting a credit spread, because if I set a credit spread, I want it to get filled at a price. It's like, okay, well, if I lose $4 here, can I make $1 or $2 on a credit spread to mitigate some of this risk? Right. And right now, the broken wing is trading for about 25, 30 cents. I'm not going to take the trade for 25, 30 cents. But if I look at a 67.20 by 30, this is trading for over $1. But am I comfortable risking over $800? Not really. I think that's an unnecessary amount of risk to take on in addition to my daily profit play. This is all the stuff we talked about yesterday in the masterclass. So I'm going to leave the broken wing alone. But because my sell strike is the 25, I'm going to look at a 25 by 30. This is trading for 50 cents. I don't mind. Like 50 cents does not mitigate my $4 risk in daily profit play, but 50 cents also, if this goes up to $1, I don't mind taking this trade for $1. Or, I mean, $1 is going to be tough to fill, but $2 is even harder to fill. Let me see. We'd have to trade at the money. Here's my 100% ATR. If we hit the 100% ATR, I mean, that's 20. So I'm going to do this. I'm going to let the butterfly marinate for $1. I'm going to put in a 25 by 30 for $1.50 is solid. $1.75 is great. $2 is amazing. If we get filled on a $2 spread out of a 5 wide move, in a 0 day. That's actually pretty good. All right. I'm going to put this in for $2.50 pending. Okay. So I'm playing defense right now. I don't know if I'm going to need it. That's why it's going to be pending. So here's the summary. This line is still my line in the sand. If prices do not come above this, my daily profit play is fine and safe, right? So the day isn't done. If we're ripping up here directionally, and then we're going to say here for the day, we have FOMC, maybe it pulls it back into center. The plus minus was about 45 to 50 points from the open. If the market makers do their job, we should not see price above or below my daily profit play levels. Okay. So what I'm going to do is defend between the hell did I do on that call side? Okay. So I'm defending at like a 67.20 mark, 67.20 with the broken wing. So 67.20 and 25 and 35 is my broken wing butterfly. And because my sell strike is the 67.25, I'm going to defend with a 67.25 by 30. So I don't want to confuse anybody here. What I'm going to add in is I have my broken wing butterfly up here, and I'm going to use the same sell strike, which is 67.25, to add in a bear call spread. So I'm using a top calculation today to see if the gap higher plus my VIX, which I calculated VIX at 24, I don't think prices should go too much higher than this. And again, I'm totally taking this trade with risk on the table. So I'm going to do a bear call spread for 250, and I'm going to do a broken wing for $1. Okay. And here's how this would add up. So this is 250 risk. This would be $4 risk, but the trade-off is I also have a $5 profit trap. So potentially I can make $600 on the broken wing butterfly, and if I get filled in the bear call spread, I can make 250 as well. That is enough to cover and still give me net profit on the day if somehow these trades get filled and I'm correct at the end of the day. If I'm wrong, I'm taking on risk. But my max risk would be $4 and $4 and 250. So I'm risking 1050 on the day, potentially able to make, $600 to $700. It's a trade-off. There's risk in trading, but I don't know if I need these yet. So they're out there pending. If I need them, I have them. And that would essentially be like, look, we'd have to see price go all the way up to hit our VIX box, which we calculated out this morning at 23.9 or 24, which is a 1.5% move, right? So if I do the numbers again, a 24 VIX, it's a 1.5 move. I calculated that out based on the gap. I don't think price will go too much higher than that. So here's our open. 1.5% puts us around 23. Okay. So if we go to 23.24, this would be 67.23.24. I'm going to be bold, but I'm just going to say, like, I think that's the high of the day. If I am wrong, I'm accepting the risk. But I'm not wrong very often when it comes to these calculations. Okay. So this is how I feel comfortable kind of defending my daily profit play in case we are going to stay above 66.90 for the rest of the day. I hope that we don't, because it makes it a lot easier if we just fall back in line and we're within the market maker move. But clearly the market is up to something. Like, what the hell, dude? This is up 60 freaking points from the open. On what? Pre-NVIDIA? Tesla? It's like, what, is NVIDIA just ripping to the upside or something? Let me see.
NVIDIA's ripping.
It's up. It's up 3%. It's like, is that enough? I don't know, man. This is kind of silly, but it is what it is, dude. It's like, I just got to trade. I got to plan the trade, and I'm doing it with math. It's not like I'm just grasping at straws here. It's like, I know that even with the slight gap higher, I'm calculating out a higher VIX because that's where we started the day. So, I'm willing to kind of put these trades in, walk away. I'm not getting these trades filled yet. They're not filled yet. So basically, if they become like near the money trades, then these could be filled. And that also helps me mitigate. If I'm wrong on daily profit play, my risk is $400. If I can make a couple bucks here, come back and join me at the close today when we see how this thing settles. because the day isn't done. We have FOMC at 2 o'clock, and maybe we're right, and all of a sudden we have some money to show for it. But hopefully, at the end of the day, it's a win. Okay, so yes, there's some overlapping here. So I am putting in on the broken wing. I'll type this up. So on the broken wing, so it's a BWB is my broken wing butterfly. It's a 6720, and then a 6725. And I skip a strike, so the 6735. And that's paying for $1 credit. Now, I can obviously put that for like $1.50, $2 and hope that gets filled. And that's a great defense trade. However, a broken wing butterfly, because of the debit spread side, it's more expensive as this is an at the money debit spread. So I generally get more credit with a credit spread versus the broken wing. So if I get filled for $1, here's the way I look at that. $1 fill on a broken wing is great. And if you've been with me for these kind of bonus trades I've sprinkled in, and we were like kind of calling the tops, and we layered in like 5 or 6 butterflies, we won. Like that was back when we were kind of calling those tops in October, November. $5, it'd be a $4 risk for $1 credit. We had some of those at $1, $5, $20, $30, and to me those are pretty good trades. So anyway, $1 credit is pretty good, and it also gives me a $4, well, I should say a $5 profit trap. If we are at the 67.25 strike at the end of the day, that's a $500 bonus in addition to the $1 credit. So this potentially pays $600. Now, it's difficult to get that because you have to be spot on, and that's literally closing at the end of the day. But that's why the trade-off is I don't take in as much credit up front, but $1 credit risking 4 with a $5 profit trap is fair. And then I'm going to overlap that. So you have to keep this separate in your broker platform because it's going to show you have now 3 contracts at the 67.25. If I do a bear call, and again, if all this is confusing, then don't take the trade. But my bear call is going to be a sell at 67.25 and a buy at 67.30. I don't have a 67.30 strike right now. Okay, so I can sprinkle this in. This is just going to be 1 contract each. But I'm going to put this in for I'm going to look for a $2 to $2.50 credit. So essentially, I'm looking to get filled kind of at the money. If we're going to come up and blow this move up for the day, and the market makers are dead wrong, well, hopefully my calculation of the VIX is going to help us contain the top. All right. So does this make sense? And I know this is a lot, but in 0 DTE, you don't have the luxury of rolling stuff. You don't have the luxury of like, oh crap, I'm wrong for today's daily profit. Let me roll that to tomorrow. Doesn't work that way. Because if you roll it, you're just taking a loss. So what I'm going to do is defend, and this is what I spent literally 2 hours talking about yesterday in my masterclass. I'm going to put a couple defense trades in here, and if they get filled, sweet. Because if they get filled, I'm pretty confident that number 1, they're good levels to defend. Number 2, it helps us mitigate the risk, and hopefully we can walk away profitable, right? And obviously, if we get filled on these and then the price still falls back within the market maker move, guess what that means? We can win on these trades and still win daily profit play and go 3 for 3. So that would be 100 plus 250 plus $1. It's like 100, $1. So it's 200. It's like what, 450 on the day if we win these trades as is without a profit trap of the broken wing butterfly. So the day isn't done, but let's see how it shakes out. And like I said, I will be going through this live at the close. I mean, regardless of where price is at, whether we're up or down or in the middle, I will be talking about this at the end of the day, and stay with me. Okay, Sean says, when filled, does the price have to stay there? No, not at all, dude. In fact, I want it to go, I want it to do this. I want price to fill and freaking drop. That's what I want. Because if these get filled, what are we doing? I'm calling the top. So if price fills and I get $1 on my broken wing, I get 2 to 250 on my bear call, and I get $1 for my daily profit play, there's my winner on the day. That's $400, right? So if we get filled these levels and we fall back within our daily profit play levels, I don't care about the broken wing butterfly if I'm going to win the $1 credit. So we don't need it to stay there. I'm saying if it's going to stay there, then that broken wing butterfly at the end of the day might offer that big fat profit trap, which would be a sweet little $500 bonus. Okay. All right. So I know that's a lot to unpack, but literally, I talked about it in 10 minutes. How about you spend 2 hours with me and do it for Daily Profit Masterclass? Because that's what we spent a lot of time doing yesterday. So on that note, Blake, let's cue it up, dude. Let's do Daily Profit Play, a little session. I'd love to see some more students in my masterclass tomorrow. We have another encore masterclass tomorrow. I'm going to make sure these notes get posted. We can review these tomorrow. This is essentially from start to finish our pre-check list. It's like if you come into the trading day like a pilot or like your inventory management, you have like a routine. And so we just walk through this, and over a year plus of refining this since this service started, or 3+ years of me personally refining my zero DT trading, this is as confident as I am in how to find good trades every day, as well as defending the risk that you're taking every day, which is literally what I'm doing today. So we're putting it all together today, and we'll see how this shakes out. So let's cue that up, Blake. And trying to think, I'll be live this afternoon for FOMC Minutes. I'll be live this afternoon for my YouTube session.